I just found a dividend stock that has huge upside potential. Its numbers are almost too good to be true. Their dividend yield, forward dividend yield, is upwards of 14%. It's insane how much potential this dividend stock has. So we'll be talking about what this dividend stock is, if I'm buying it, why or why not I'm buying it. And so we got a lot to go over in this video, but all I ask, if you find any value in the video, you make sure to subscribe to the channel, yada yada, not gonna waste your time. Let's go ahead and get straight into it. So the stock we're gonna be looking at is Zim Integrated Shipping Services, ticker ZIM. Now this stock has been absolutely on an incredible uptrend. Over the past month alone, it's up 23%. Past 5 days, it's up 5%. 6 months, 69%. In the past year, it's been up 354%, all the way from $20, $17 a share, up to its all-time highs of $72 per share. This company is just on an incredible uptrend, and they have a PE ratio of 2.61, a dividend yield of 13.8%, but their forward yield is actually a little bit higher. Now, let's go ahead and talk about what even is this company before we look at their numbers. So, Zim Integrated Shipping, with their subsidiaries, provides container shipping and related services in Israel and internationally. They provide seaborne transportation and logistics services comprising sorry about the stutter right there, comprising dry, reefer, project, out of gauge, break bulk, and dangerous cargo services. So they just pretty much ship things internationally and in Israel. They're an asset-light company. They got a lot to talk about. Let's talk about they only operate in select trades where they have a competitive advantage and can provide superior service. And that's one thing I really like, is I almost would prefer a company that can zone in on a certain sector, certain market, and can just be incredibly good at it, rather than being really wide and being average at it. And this is something I really like. In these trades, they're a significant player with a sizable market share. With proud decades-long heritage, they're confident in their ability to maintain their position as a top industry performer. Because from Yahoo Finance, it says this company was founded in 1945, which is insane stuff. You'll see right here. Governance, this company was founded in 1945. So that's pretty big things. I do believe that this company is a strong buy if it fits your portfolio, because some people like myself will go right here. Forward dividend yield is 14.51%. So for example, if this fits your portfolio, maybe you are a high yield investor, you're wanting consistent cash flow right now, I think it's a strong buy. For me personally, I am not buying in on this stock simply because I'm looking for more growth, and this company, something about it to me just feels like it's almost too good to be true. But let's go ahead and give it a deeper analysis on the stock. So looking at their dividend scorecard, there's really no grades. Their dividend growth is for 0 years because they just started paying out these dividends. They have a payout ratio of roughly 8%. We'll look on management expectations for their dividends later in the video. But if we go ahead and look at their dividend history, they've only really paid about 2 dividends. So if we go right here, once this loads, sorry about it being a little glitchy and everything, but they paid their first dividend in 2021 in August for $2, and then in December they paid a $2.50. So you times that by 4, it gives you about $10 forward yield, 14% roughly. So if we go ahead and look at some statistics on the company, their margins are incredible. 38% margins, 47% operating margins. Revenue and earnings growth have been insane, up 900%, up 209%. And one thing I want to point out is it's not like a lot of people are shorting this company at the current time, because supply chain demand issues, and especially with people online shopping now, this does raise the demand for this company. So that's one thing why I'm not completely set on not buying this company. I just need to reevaluate, and I almost want to think about it a little bit longer before I add another stock into my portfolio. But the short percent of shares outstanding is 2.89%, which it's not super low, but it's not super high compared to some of these penny stocks who have 10%. So I just wanted to point that out there. Analysts aren't super bearish. And the free cash flow is looking really solid right now at $2.52 billion. So the financials, let's go ahead and talk about these. Growing year over year, and it was growing year over year pretty solid from 2018 to 2020, but it wasn't growing at super high rates. And then in 2021, the trailing 12 months, it's been berserk. Net income used to be negative, and then 2020 got positive 517 million, and then to 3.3 billion in net income now. And the company's current market cap is 8.59 billion. So their numbers are really, really good. I mean, you can't really complain about these types of numbers. Now, looking on their balance sheet, if we go ahead and just give it a look, it's 2.824 billion compared to 2.5 billion in liabilities, which is really good. More assets and liabilities is a big thing. And then their investing cash flow, all those other things, they're usually negative. Operating cash flow is doing really solid, and cash position is increasing, and free cash flow is 3.6 billion. These are some really solid numbers in my personal opinion. Now, one thing that struck a red flag in my opinion is $38 was the earnings per share for this year, and then expected to drop to 28.7. I'm not exactly sure why, but we saw that, and then sales was kind of expected to grow down. But if we go ahead and look at their management, what management is saying, it kind of varies, and they have better expectations, and they're already on better track. But Zim is at a 10% premium compared to Morningstar analysis. Let's go ahead and actually talk about what management is saying. So their latest quarterly report was Q3 of 2021. Revenues of 3.1 billion, do that times 4, gets you about 12.4 billion. Net profit of 1.5 billion, which is really good numbers. Now, if we go ahead and talk about their dividend, here is just their cash flow overview. It says their dividend is negative 237 million, which, looking at those numbers, I mean, 237 million compared to cash flow from all these, that's such a low payout ratio. Their net income of 1.5 billion. But here is one thing that I really liked is elevated freight rates driven by high demand coupled by supply chain challenges. So they're having all these challenges, and they talk about how they have this economic moat, they have this advantage, they have this time that they've been experienced, and this is something that could really strengthen this company and give them really good potential, especially in this supply chain demand challenges. But let's go ahead and talk about their 2021 full year guidance. So EBITDA expected to increase. We're seeing really good things. Updated guidance is just continuing to increase these numbers by a lot. Now let's talk about their dividend policy, because we're all dividend stock investors here. Let's talk about this. Their previous policy was to have about 30 to 50% payout ratio. Their new policy is to have about 20% of the quarter's net income. And the fourth quarter will be about 30 to 50% of annual net income. And this really is some insane numbers. Like, they're paying out $2.50 a share, which adds up to about 14% forward yield. That's roughly 20% of Q3 2021's net income. So one thing that you could do, it's just an idea, is play this out, buy the stock like now if you want to, not financial advice, but like reap up and kind of soak in these dividends while they last, if they don't last forever. Because you're getting a really high yield on a company that's doing really good right now and has good forward expectations. So as long as they can meet these expectations, at least for a few months, maybe a few years, that's going to be really good things. Now, if we go ahead and look at some news and different things, stock price targets on this company, about $100 is the high, $43 is a low, $85 is a median, $79 from $71 current price is the average. Institutions looking pretty solid, a lot more inflow than outflow. But here's something that stood out to me. So I just want to read this off. Because logistical disruptions are unabated, freight expenditures are projected to continue rising. However, because consumer demand for all types of good continues to rise, especially with the extended remote life culture, the shipping sector is expected to grow substantially in the coming years. Analysts expect Zim's revenue to be $10.45 billion in fiscal 2022. Its earnings per share is expected to grow 4.3% per year for the next 5 years. In addition, it surpassed the street's earnings per share estimates in the 3 of trailing 4 quarters. So they're beating expectations. They're doing really good. The industry that they're in is expected to perform really well over the next few years. So this is a really solid stock, in my personal opinion. It's almost like a hidden gem. Not a lot of people are talking about it, I think. So if you want to buy in on this stock, in my personal opinion, is a really good buy at the current time. But numbers could go wrong because their numbers have been so well recently that they could kind of almost fall down to normal levels. It's almost like it's too good to be true. But I'm not saying you shouldn't buy the stock. I think it's a really good stock, in my opinion. Looking at the numbers don't lie. But everybody, that's going to wrap it up for this video. So if you enjoyed it, make sure to subscribe to my channel, turn on post notifications so you don't miss out on any future videos. Thank you for making it to the end of this video. And if you haven't used M1 Finance, make sure you use the link in the description or the pinned comment down below. It'll say M1 Finance. That link right there. They're doing a promotion right now where if you put in $50, $50, you will get 50 free dollars. So they're giving you money to invest, and even that $50 they give you back You can take it out and put it in your bank account. Do whatever you want to with that money. It's free money, so make sure to check it out. Thank you for making it to the end of the video, and I will see you at the next one.